Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar slid lower, extending losses for the fifth straight day, even though the US dollar, which measures the greenback strength against a basket of six major currencies, ran out of momentum and slipped away from the region of 102.40 to 102.10. Meanwhile, according to the latest economic data, the US initial jobs claims for the week ended in December 29 outperformed the expected claim count of 216,000, missing a 202 forecast. All eyes now turn to the US non-farm payrolls, which measures the number of workers in the US except for those in farming, private household and non-profit employees and active military. Presently, the forecast holds to 168,000 jobs added in December, marking a decline from November's 199,000, while the unemployment rate is expected to edge from 3.7 to 3.8%. A weaker than expected non-farm payrolls print would weigh on the US dollar, as it would pressure the US Federal Reserve to deliver a rate cut sooner than later, or vice versa, if the report is stronger. Based on the technicals, from the region of 66.65 I anticipate a bounce, and therefore a possible correction back towards 68 cents, or even extending to 69 this month. Moving on to the euro, the market found a bit of momentum overnight, even though the German inflation in December rose after the CPI matched estimates and ticked to an annualized 3.7% in December, up from 3.2% in the previous month. With all eyes on the US non-farm payrolls, it is anticipated that the market should eventually rise on towards 110 to 111. Any weakness views support from this trend line around 108.80 to a base of around 108.20.35. Since the break of the downtrend, we can see that the market is squeezing, and for the last 3.5 days strongly. It is anticipated that there is a bull trap lurking, and as we get closer towards the region of 144.90 to 145.25, I do anticipate eventually the market to turn down and look back towards the region of 140 and reassess from there. Indicators are getting somewhat high, so this also warrants a pullback. Sterling, well, the market is a little bit firmer into Thursday, Friday morning, and now looking for a further gain with the technicals might get into a positive bias, but I do believe with the ADX supporting a potential bull trend, the market is likely to push on towards 127 to 128, the previous highs that we saw in December. Any weakness should be limited. Since the sell-off in gold, the market is holding above the key support level around 2036 to 38, and therefore should eventually see a rise as the dollar weakens. This would put the market in trajectory of a challenge to 2057 to 59, or even extending to around 2070. I'm not going to view the market as a weaker play due to the fact is that there is a bit of a pause in the recent sell-off, so it does warrant for a further gain into today's session. Wrapping up with oil, the market's rebound run out of momentum, or more to the fact fizzled out quite quickly, and now maybe seeing a small pullback, but I feel towards the lower side of the range around 70, 80, 90, the market should bounce and eventually reach its objective of $75 a barrel. Well, that's a wrap. Thank you for joining me, and as always, look out for the interest rate report. I hope you enjoy the great start to the new weekend.